This is the Simplify Kayne-Anderson Energy and Infrastructure Credit ETF, ticker symbol KNRG. In this video, we'll discuss what is KNRG, why invest in energy infrastructure, how KNRG is managed, and portfolio use cases. KNRG seeks current income with a secondary goal of capital appreciation by investing in credit instruments of energy and infrastructure companies. What is energy infrastructure? The two primary categories that KNRG focuses on are midstream companies, which focus on pipelines, liquid natural gas export, logistics, processing, and distribution, and power, including integrated utilities, battery storage, transmission lines, renewable power, and grid services. Why invest in energy infrastructure? These companies are providing a mission-critical service, as without energy and power, the entire economy would literally grind to a halt. Energy infrastructure companies have revenue streams that are largely contractual, making their revenues more reliable than other types of companies. Most contracts in this space include escalators that ensure that contract revenues keep pace with inflation. Favorable tailwinds include the modernization of the energy grid, the reshoring of manufacturing, and the rapid build-out of AI data centers. Lastly, securities in the space can offer some compelling yields. We can see that the demand for global power, particularly in the data center space, is expected to rapidly expand, with 10% expected annual growth over the next decade, according to the International Energy Agency. Global data center energy demand already exceeds Japan's entire annual energy usage. Energy infrastructure credit can also offer some compelling yields. KNRG targets yields that can exceed those of U.S. high-yield bonds while offering higher credit quality. KNRG is sub-advised by Kayne-Anderson, a firm with deep expertise in the space. They have over 20 years of investing experience in energy infrastructure, with a team of 10 energy infrastructure investment professionals. They have industry expertise in the space across all sectors of the capital stack, including a long history of owning energy infrastructure equities. Here's how the investment process works. The three basic components are idea generation, where attractive opportunities are identified, credit research, where Kayne constantly monitors the fundamentals of every credit in the portfolio, and trading, where their extensive contacts across multiple counterparties can often allow for the best possible execution. Let's take a look at a couple examples of this process in action. Many energy infrastructure companies are perennial issuers of new securities, as there is a need for financing of new projects. When they issue new debt, it is typically issued with a yield premium above existing debt in order to attract investors. Thus, one of KNRG's core strategies is to buy new issues of the companies they have expertise on, with the goal of benefiting from the temporarily higher yields and rotate out of them over time as the yields eventually revert back down to match older bonds, resulting in opportunities for capital appreciation. Another strategy that the fund employs is to use Kayne's extensive credit analysis to take the optimal position in a company's capital stack. The stack might include senior debt, subordinated debt, preferred stock, and common stock. Comparing two companies with differing credit ratings, KNRG will often take a position in the junior debt of the company with higher overall credit quality, rather than the more senior debt of a company with lower overall credit quality. By doing so, the fund might benefit from similar yields with a lower risk of default. Now let's discuss some of KNRG's use cases. The first use case is as an alternative to high-yield corporate bonds. KNRG targets securities with similar yields to high-yield corporate bonds, but with an overall higher credit quality. The second use case is for investors who value the attributes offered by energy infrastructure credit, including exposure to a mission-critical sector with contractual revenue streams, built-in inflation escalators, and favorable tailwinds. Now for some Q&A. Are KNRG's returns dependent on the price of oil and gas? Most of the revenues in the energy infrastructure space are via long-term contracts that do not depend on the price of oil and gas. Significant price movements are more likely to be influenced by market movements in interest rates and credit spreads. What is KNRG's interest rate sensitivity? KNRG has less interest rate sensitivity than investment-grade corporate bond indexes, but slightly more interest rate sensitivity than high-yield bond indexes. What is the tax treatment of KNRG distributions? Investors can expect that the majority of distributions will be classified as ordinary income. KNRG does not issue K-1 tax forms. Thank you for viewing this presentation. For more information about KNRG or any other Simplify ETF, please go to simplify.us/ETFs. We'd like to hear from you directly, so if you click the Contact Us link at the top of the page, we'll be in touch with you promptly.